What's up, guys? It's your boy Coach K, man. So I want to come and make a video for you guys today to follow up with the last video that I made pertaining to a strategy that I just kind of did from my mobile phone because I was just kind of wanted to get it out the way. I was busy and everything. So hopefully you guys learned something from that. If you didn't, I'm gonna go into detail following up on that strategy, just tweaking a little bit, okay? Basically, before I get started, I want to go ahead and let you guys know that this is not financial advice. Anything that I say in this video should not be taken as financial advice. If you guys are looking for financial advice, with all honesty, seek a financial advisor, right? All right, so everything that I do here will be for entertainment purposes only. And like I like to tell you guys, I just want to show you what works for me. Now, with that being said, let's go ahead and get started, man. I'm not gonna rant on about things. I want to go ahead and jump straight into the video. All right. All right. So basically, today I'm gonna talk to you guys about leveraging again, right? Because my strategy is based on leveraging. Once you learn how to leverage and once you put your mentality in check and get rid of the get rich mentality, then you guys should become successful traders. If swing trading a little bit or not seeing $1 million within a year, or not seeing 3,000% within a month, something like that. This is not that. But if that's what you guys are interested in, then this will not be the video for you. So this video is going to be for experienced traders, beginner traders who at least know what support and resistance is, and how to manage lot sizes or information about lot sizes, right? Because we're using forex brokers. All right, so basically, to go ahead and get started here, I'm going to show you guys how to leverage your account around a 10% correction. So if you see all the way from the all-time high, which was about 4,550, if we were to go do a 10% correction, if the market was to fall 10%, it'd be like where this white line is right here, right? And it'll actually put you down 455, 455 pips from the all-time high if we was to do a 10% fall and do a 10% correction, right? Now, a 10% correction is a deep correction. And I know a lot of you guys are probably saying, like, we're probably not going to correct that 10%. Hey, and that's just fine. That's fine and dandy. But would you like to be prepared just in case, something like that does happen? And that's what I want to show you guys. I'm not saying that we're going to get a 10% correction. However, it's pretty hard for the indexes to fall and correct around 10%. A lot of times when it correct around 10% and further, then we're going into a bearish territory, right? That's when we start crashing a lot of times. But I want to build this strategy right here again around 10%. So basically, with that being said, I hope you guys understand what I'm doing here. I'm talking about leveraging, and I'm talking about leveraging around a 10% correction. And this is about to make sense for you guys right here. All right, so this chart right here is something that I created. It was, I didn't find it from Google, or I didn't copy it from anyone. I took time out to draw this chart, right? So what you see here at the top is leveraging based on the 10% correction. So I just showed you guys that if we were to fall 10% from the all-time high, then that'll bring us down about 455 pips. With that being said, let's go ahead and get out that calculator. All right, so if you have $1,000 account balance, right, and you was to open up, say for example, 2 orders of 0.01, right, which in layman terms, that's $1 per pip. So every dollar that this SPX500 moves up or down, your account is going to move up or down in value, $1 up or down, right? All right, so basically, if we was to do a 10% correction from that all-time high, we'll be down these 455 pips. right? And if you were to have 2 orders open, right, then you will be down $910 if that was to happen. Same thing with an account balance of $2,000, right? If you were to have 4 0.01 orders open, 4 of them, and we were to drop that 455, we'll times that by your 4 orders, you'll be down 1820, right? Which would take up most of your $2,000 account balance, right? Same thing with $3,000, $4,000, $5,000. So the more money you guys have, the more lots you can open up, right? Or I like to call them orders in layman terms, so people can understand. I want to make this video for people that are not professional traders. I want to make it for novice traders, beginners. So my terminology is to reach. The type of way that I talk, I want to reach all type of audience. I want to reach the experienced traders, the beginners, whatever. So basically, that's what I'm saying. I want to utilize my terminology to be able to be understood by different kind of traders. Now, what I want you guys to see at the bottom is anything from 5% to 10%. That's really is considered like a correction, right? So anything from 15 to 30% is really considered a crash, right? Which puts us in, bear market territory, right? But what you have to realize is in the history of the stock market, we only have crashed about, 6 times. From me looking back in the research that I've done, some people say 5 times, but I count 2018, right? Which I know the trade war and everything had a lot to do with that. Like these crashes was, something caused all of this. 2000, the dot-com bust, 2008, the housing. Like there was events that happened that led up to these type of crashes, right? But just want you guys to like understand that since like the 1900s or the late 1800s up until 2021, we had only about 5 or 6 crashes, and we had one that was last year. So what that means is that the SPX is not going to be dropping, 15 to 30% every year. It's not going to happen. So I think that it's good to actually build up a strategy around, a 10% correction, right? Or 8%, whatever you choose. My job here is to lay out the foundation, and I want you to see trading from a different aspect, right? Because you have a lot of people that post a lot of videos and they show you the same thing: support, resistant, candlestick patterns. This is how I eat. And I'm not saying they're not being truthful, but what I want you guys to understand, there's a larger percentage of traders that are not profitable at this point. So you guys are watching videos and you're doing your EMAs and all of that good stuff. I don't knock you for doing that. To understand how the market moves, right? If you can understand how the market move and say, hey, the market falls about this type of percentage, every year, build up a strategy around something like that, because I guarantee you those traders are not going into this type of breakdown that I'm giving you guys, right? I'm giving it to you like straight up. Like after this, like you guys should at least make 50% in a year return. Minimum. You should make at least 50%. That's without even trying. That's without even trying. And I'm gonna get into it and show you guys a little bit more, right? But you should at least make a minimum. So basically what I'm saying is, the traditional way of letting the interest, be a money supply for you guys, and the 401ks, which only give you about 15% a year, it got to stop. I'm gonna show you right here how you can at least make 50% on your own, man. All right, so let's get started here. Again, I already showed you the lot sizes right? I showed you like if you have a $2,000, $3,000, $5,000 account, how many orders you should, actually have open. All right, so let's break down into a little bit more where you guys can understand, and let's talk about money. All right. All right. So this line represents the first day of trading for 2021, which was January the 4th. I want to see if I can make my screen just a little bigger so you can see the candles. All right, just a little bigger. All right, there we go. All right. So this is a red candle. The way it moves, it opens at the top, it closes at the bottom, right? That's something that you guys should know. If you're watching this video, that's like basic stuff, right? So if you don't have the basic fundamentals down pat, then don't come back to this video after you learn what support and resistance is, or how a bullish and bearish candle open and close. If you don't know that, then don't watch this video, right? Come back to it, and I promise you, it'll change your life. All right, so the market opened up at 37.57, right? January the 4th. So if you have $1,000 account, how many orders can you open up based on my leverage strategy around a 10% correction? 2. Only 2 orders. And I know you guys say, man, $1,000, that's a lot of money. I can do this. I can open up this. I can make $5,000 in 1 week, with $1,000. Listen, I'm talking to people right now, and I'm sorry that I'm explaining it like this, but I'm talking to individuals right now who's tired of losing money, who's tired of blowing accounts, who's tired of watching YouTube videos and they're not making money. I'm talking to you guys, right? I'm not talking to the big shots and all of that. I'm talking to you guys because at the end of 12 months, there's no reason why you shouldn't have a minimum of 50%. I know you'll have a couple 100% with this strategy, but those are the people that I'm trying to reach. All right, so we open up here at 37.57. So if you got $1,000 account and you open up 1 order, right? 0.01. All right, it's January the 4th. All right, if we would have held that for, and I'm just giving you guys an idea. I know we can't change time or whatever, but if we would have held that to, say for example, let's call it February, right? Let's say for 1 month. If we would have held it for February the 4th, right? At the end of the day, we'd have made $115. All right. Cool. So if you have $1,000 account, and I want you guys to know some basic math. If you got $1,000 account, you were to get in the beginning of January, you would have hold 0.01 for 1 month. It would have brought you up 115 pips. Now, if you are a little bit of mathematically inclined, you know that's over a 10% return. You started with $1,000. You made $100, right? 100 of $1,000 is 10%, right? Let me show y'all that on the calculator. I'm sorry to waste people time that I already know this like off the top of their head, but 1,000 times 10% equals $100. So you guys are already up 10% without even opening up, a second order, right? Because I told you with $1,000 account, you can open up 2 orders. But if you was to just open up 1 and was to hold it for 1 month, it'll put you up 10%, right? All right. But basically what a second order comes in at, right, is whenever it drops, right? It can be going up. It can be going up. But if it drop a certain amount, and that's up to you guys to determine, that's when you will open up that second order. Don't open it up. If you open up an order at 37.58, don't open up another order at 37.60 or 37.55. Like, at least spread it out, right? Let it drop, 30 pips or so. Don't be so anxious to want to go ahead and open up another order. But I'm gonna show you a way to guide you guys, which is the RSI, to when you should probably open up more orders. If you have more than $1,000 account, say if you have a $2,000 account, you can do 4 orders. Now you can actually spread them out. You know what I'm saying? You can spread those orders out. But here's the RSI for you guys that may have only $1,000 account. All right. You see this line right here? I did it at the 50 at the halfway mark, right? Because a lot of institutional buyers, they like to buy whenever it comes down to this 50 mark. They really do. All right. That's just some research that I did, and that's what I know. All right. So basically, if you guys want to open up that second order, right? We started here January the 4th, right? All right. So if you see it hit that 50 line, hey, look, January 27th is when it hit that 50 line, right? And keep in mind, we're still in January. So I feel like that would have been a good time to open up another order, right? Right there would have been a good time. So if we would have opened up another order when they hit that 50 line and also held that second order to February the 4th as well, that would have been an additional 138 pips, right? Which would have gave you $138 and will also give you $115. So let's add up our profits from those 2 orders, right? So 115 plus 138, right? Would have gave us $253. All right. So if we have a $1,000 account, we already made 25% in the first month, right? So with that being said, and if you guys are following me, I don't have to go through this whole chart to show you guys how you could have ended up, with a couple 100% by now. Look at this thing. We were bullish, right? We were bullish, right? And then the more money you make, then the more you can actually increase your lot size, right? Because you started out with, let's go back to it. You started out with $1,000, but it looked like to me, hell, we made 250 in the first month. If we make another 250 in the second month, that give us $1,500. So with $1,500, you guys can open up, another order or so, and then when you get to 2,000 account balance, then hey, that go 4 orders right there. But keep in mind, you only started with $1,000, right? So just keep that principle in mind that you can keep increasing your orders and your lot sizes or whatever. You can keep increasing them. Just don't over leverage, right? Again, this is only the foundation. I want you guys to take this information that I'm giving to you and you tweak it how you want to tweak it. But I guarantee you, if you follow just the foundation, the basic foundation, you should do at least 50% minimum. If you don't know anything about trading and you watch this video, there's no reason you shouldn't do at least 50%, right? All right, but I'm just laying down the foundation. You guys can do what you want to do with it, right? So, all right, so the first month would have brought us about a 25% increase, All right. So again, we can watch this, RSI level, to see when is a great time to buy. Also, you can watch your support and your resistance. I'm not gonna tell you when is a great time to buy, right? That's not part of me laying the foundation. Whenever it hit your support level or resistance level, whatever you feel comfortable with, or you can do it, based on percentages. If this thing's been dropping about 5 or 6%, hey, you might want to open up an order after it dropped 2%, or after it dropped 3%, or 2.5% or 4%. It's up to you. That's your homework. You find out when it is that you would like to open up, a different order. But man, the more orders that you can open, then the more money you can actually make. So a lot of you guys right now are probably saying, well, when do we take profit? When do we take profit? So you can actually take profit whenever you start correcting, or whenever you open up an order and you say, well, look, I'm gonna keep this order open until I make 100 pips. And it's possible, especially in the uptrend, right? You can make 100 pips. It's up to you to decide, when you want to take profit. You understand what I'm saying? So I can't tell you when to take profit, but I can tell you that you're going to go into profit because the market always corrects. You just have to be patient. Okay. So this whole year, the market has been going up and down like it's been doing since the 1900s. It's been going up and down, up and down, up and down. So at what point is it that you would like to take profit? That's something that you will want to decide. I can't tell you that, but what I can tell you is to take profit. Look at this: up, down, 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 up, now down, right? So with that being said, man, you know what the market is going to do. You just need to build a strategy around the dips. And that's what I'm showing you guys. Once you learn how to leverage, then you should be good, right? All right. So another thing that will expedite you guys performance here is, let me show you something right quick. Let's go back to it. All right. So you're looking at the account balance, the number of orders, the lot size, everything that I created. So what you have to understand too, if you're currently working a 9 to 5 job or you own a business or whatever, instead of putting that money in other places that's only going to give you 0.5% or something every quarter, set that money aside in your broker. You don't have to put that money in play. You can, transfer the money to your broker. You can just have it sitting on the sideline to take advantage of bigger dips, right? So say if you were someone who started with $1,000, right? And you wanted to hold even longer. So say you wanted to hold longer, you started with $1,000, right? So you open up right here for the year. All right. You decided to hold, let's just say you decided to hold it for 4 months, right? I'm just giving an example. All right, so from January the 4th to February the 16th, what about you here? That's a 200 pip game, right? So say like you're holding, right, for a long term, but you get a dip right here. You get this dip, right? All right, if you're working a job, right, um, and you're putting some of your paycheck into your Forex broker account, and every week you get paid or every 2 weeks you get paid, you're saving that money. So when the market dips like this, you can go shopping. And that's what you call, buying, the index on sale. It's on sale right now, right? So the money that you put in your bank account and everything, you can now, or in your broker account, I'm sorry, you can now transfer over, into your actual trading account, right? And buy the dip, right? So that's another way, just showing you guys another way how you can actually quadruple your money and get a better percentage return as well. Right. So I hope this stuff is making sense to you guys, man. Um, because like I say, no one else is gonna show you guys this. All right. Um, another thing, I know you guys are, I told you about the 10%, which would be at this white line right here. If we was to do a 10% crash right here, for you guys that haven't even placed a trade, man, you are in a good position, because the market is already down about 5.5%, right? So if you was to start trading today, you know, give yourself this type of leverage, which is only another 5%, right? Because for those who were in at the all-time high, and if we was to correct 10%, this is what we'll end up at. But it'll only be a 5% drop for you guys who haven't even, traded yet, or for you guys who have money sitting around that you can actually trade with. Okay. Now, what happens if this thing go past 10%? I'm glad you asked. I'm glad you was thinking about it. All right, so are you guys familiar with the 200 exponential moving average, right? That's a 200 EMA. All right, so long story short, the 200 EMA represents an uptrend, right? So meaning that even though we're dipping right now and we're kind of trending down right now, um, as long as we're over the 200 EMA, which is this red line right here, we are still predominantly in the uptrend. Now, once we fall under this 200 EMA, then it's time to sit on your hands. That's what I call it. You can actually sit on your hands. We don't want to trade under the 200 EMA. All right, just sit on your hands and don't trade anymore. Right. Hopefully that you guys are not over leveraged, at that time or whatever. And hopefully you save some money, from your business or, your employment or whatever. All right. So, this thing, it will, it have dropped in the past, 20, 30%. But it also came back around. I haven't seen it drop, further than that in a long time, man. I'm talking years. But keep in mind that we stopped trading under here, and I know you guys like, well, what if it keep dropping? What if it keep dropping? Past the 200 EMA. You know, at that time, if you want to, I don't recommend. If you notice, I haven't talked about any sell orders, right? I do sell orders. I know when to do them, but for me to explain that to you guys, I will actually have to, put it in a course, slow this video down and just kind of give you a better explanation on it. But it's possible that you can do a sell order, to stop the bleeding. That's what I like to call it. And then when the market start trending back up and we're done bleeding, then you can go ahead and remove that sell order or whatever. Right now, you're just protecting your. They call it hedging, but you're protecting your initial investment whenever you put in sell orders. But that's for more advanced traders. I'm just showing you guys, like, hey, when it falls up under that 200, you may not want to trade. You understand what I'm saying? So if it keep dropping, it's possible. But I want you guys to understand this, and this is why I made this. In the history of the stock market, we had 6 crashes. Again, some people say 5. Since the stock market been going on all of these years, like how likely do you think that this thing will actually fall, 30% in 2021 or 2022 or 2023? How likely are you guys think that is to happen? We don't have a crystal ball, and I'm not going to get on here and sound like, some of the traders that want to tell you, things like they know, exactly what's going to happen. You know, um, Anybody that can call the top and bottom are liars. All right, let that sink in. All right, so with that being said, man, I think that's it, man. I hope you guys learned, from this video. I don't think there's anything else that I want to go over in this video with you guys. But again, it's just based on leveraging, man, and I'm laying down the foundation. That's the foundation for you guys, man. Any questions, comments, man, please hit the like button. Please subscribe. Because I'm coming with more things, man. And there's a lot of, man, I've been trading for quite a while. So I'm finally breaking out of my shell. And really I'm tired of seeing, people struggling, man. And also, if you guys just started trading like a year ago or something like that, man, just listen. If you run across somebody like myself or someone in the streets that trade, don't overtalk them. Just listen to what they have to say. All right. None of us don't know it all. We can always learn, but I'm running across a lot of people that I connect with, on social media, and I end up talking with them on the phone, and they know more than me, and they only been trading for 8 months or 6 months. So please listen to people. Get rid of that get rich quick mentality. Follow this basic strategy that I'm just giving you guys, and tweak it how you want to tweak it. If you don't over leverage, you will see a minimum of 50% return. No more 401ks, no more 15% returns, no, none of that goofy stuff, man. All right, guys. So again, it's your boy Coach K. Again, please hit the like button, please subscribe. Y'all help me. I'm gonna help you. And thank you for watching, man. And enjoy your day.